Hello viewers, welcome to my channel. I am Hasham. Already 11 problems I have completed on electricity companies' financial statements. So now I am continuing the next problem, that is problem number 12. So if you have watched the earlier problems, now definitely you will be in a position to solve the problems on electricity companies by applying the provisions of Electricity Companies Act. So in the earlier videos, all the problems I have solved. So if you're watching regularly, definitely you will get a lot of confidence on this topic of electricity companies. If you join right now, it will be very difficult for you to understand the problems. So my suggestion, if you want confidence, if you want the complete command on the subject, watch the video from beginning. First video I have uploaded on introduction, on explanatory part of Electricity Companies Act provisions, how to make the financial statements, how to find out the surplus, how to dispose of the surplus. All these things I have explained in the beginning. So I suggest you to go to the playlist of my channel, select the subject Advanced Corporate Accounting, select the topic Electricity Companies, watch the introduction part, then starting videos are very important. So watch those videos and then only you can join now, you will get a command. Otherwise, if you join in between, you will not get the complete knowledge. And one more suggestion, once if you start watching the video, watch the video till the end. Don't skip in between. Don't skip in between. That's the main, suggestion I can give you. Then only you can get maximum from these videos. Now, before starting the 12th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So take a printout and keep it ready before start watching the problems. 12th problem I am reading out. The following balances have been extracted at the end of March 2002 from the books of an electricity company. Share capital 2 crore. Share capital will be taken only in the financial statements. Here we are required to find out the profit and surplus, disposal of surplus. So share capital 2 crore, fixed assets 5 crore, depreciation reserve on fixed assets 60 lakh, reserve fund invested in 8% government security 1 crore 20 lakh, contingency reserve invested in 7% state loan 24 lakh, amount contributed by consumers towards fixed cost of fixed assets 4 lakh, consumer deposit 80 lakh, tariff and dividend control reserve 20 lakh, development reserve 16 lakh, 12% debenture 40 lakh, a loan from electricity board 50 lakh, intangible assets 16 lakh, current assets monthly average 30 lakh. The company earned a profit of 56 lakh after tax in 2001-2002. Show how the profits have to be dealt with by the company assuming the bank rate was 10%. It is asking you how to dispose of the profit, how to dispose the surplus. That's what it is asking in the problem. So for calculating surplus, we need reasonable return. For calculating reasonable return, we require capital base. So step by step we'll go. First we calculate capital base, then we calculate reasonable return, then we calculate surplus, then we'll show how the surplus will be disposed. Now first of all, calculation of capital base. Already in so many problems we have seen, you have to remember the addition items and deduction items. The addition items, first of all, original cost of fixed asset. From original cost of fixed asset subtract the amount contributed by consumers towards fixed asset. So here original cost of fixed asset is given in the problem 5 crore it is given. From that we deduct consumers contribution towards fixed asset 4 lakh. So deduct 4 lakh, 4 crore 96 lakh. Then intangible assets given in the problem. Then monthly average of current assets. Then contingency reserve, investment against contingency reserve or contingency reserve investment. These 4 items normally every problem we are having whenever we calculate capital base. The first, original cost of fixed asset, from that deduct consumers contribution towards fixed asset. Second, intangible asset. Third, monthly average of current asset. Fourth, investments against contingency reserve. Add up these 4. A point. Now deduction items. First, depreciation on fixed asset. Every problem we are having depreciation reserve. Second, loan from electricity board. Definitely every problem we are having loan from electricity board. Third, debentures. 12% debentures, 40 lakh. Development reserve, consumers deposit, tariff and dividend control reserve. So you can see almost every problem we have seen the same points, no change at all. The only thing you have to remember, what are the deduction items? The deduction items are 2 crore 66 lakh. So what is the addition item? 5 crore 66. 5 crore 66 lakh minus 2 crore 66 lakh. 3 crore is the capital base. First step completed. Second step, reasonable return. Calculation of reasonable return. Here you have to remember 5 items that will come under reasonable return. The first one is return on capital base at bank rate plus 2%. So what is the capital base? 3 crore. This 3 crore will be multiplied by bank rate plus 2%. Bank rate is given in the problem, that is 10%. Bank rate is given in the problem, last line. Assuming bank rate was 10%. So 10 plus 2, 12%. So 3 crore into 12%, 36 lakh. 36 lakh is the return on capital base. Second, income on reserve fund investment. Reserve fund investment. It is given reserve fund investment as 1 crore 20 lakh and the rate of interest is 8%. So 8% of 1 crore 20 lakh, 9 lakh 60,000. Now 3 times 0.5% on loan from electricity board. How much is the loan from electricity board? 50 lakh. So 50 lakh into 0.5%, 25,000. Then 0.5% on debentures. The debentures are 40 lakh. So 40 lakh into 0.5%, 20,000. Then 0.5% on development reserve. Development reserve 16 lakh. So 16 lakh, 0.5%, 8,000. That's all. 5 items we have completed. Take the total. 46 lakh, 13,000 is the RR, reasonable return. First step, capital base completed. Second step, reasonable return completed. The third step, surplus. It's very easy. Clear profit minus reasonable return. Clear profit is given in the problem. The company earned a profit of 56 lakh during the year. It is given. The actual profit is 56 lakh, but the reasonable return that the company should earn is 46 lakh 13,000. Subtract it, 9 lakh 87,000 is the surplus. 3 steps completed. Capital base, reasonable return, surplus. Now last and final step, disposal of surplus. This surplus 9 lakh 87,000, how it will be disbursed, how it will be disposed of. Now, disposal of surplus, you need to apply some steps. The first step is calculate 20% of RR. Second step, calculate 5% of RR. Third step, 1/3 of A. A, B, C. 20% of RR. How much is the reasonable return? 46 lakh 13,000. So 20% of 46 lakh 13,000, 9 lakh 22,600. Call it as A. Then 5% of RR, 5% of 46 lakh 13,000, 2 lakh 30,650. Call it as B. Third point, 1/3 of A, 1/3 of 9 lakh 22,600, 3 lakh 7,533. Call it as C. 3 items, A, B, C. Now fourth step, B or C, whichever is less, we call it as D and it is free use for the company. The amount of surplus is free use for the company. Free reserves. So B or C, whichever is lower. So out of B and C, which is lower? 2 lakh 36,50 is lower. So 2 lakh 36,50 is lower. Call it as D. And this is the amount freely available to the company for any use. Right? Now we calculate surplus minus A. Surplus minus A. Surplus is how much? 9 lakh 87,000. How much is A amount? 9 lakh 22,600. So surplus minus A. That is the amount transferred to consumer benefit reserve. Consumer benefit reserve. Surplus minus A, 64,400. This should be transferred to consumer benefit reserve. That's all. Now we calculate A minus D. A minus D. How much is A? 9 lakh 22,600. How much is D amount? 2,30,650. Minus कर दो. A minus D, 9,22,600, 2,36,50, 691,950. So 691,950 is A minus D. Now 50% of A minus D will be transferred to consumer benefit reserve and 50% transferred to tariff and dividend control reserve. So 50% of A minus D, 50% of 691,950 transfer 3,45,975. This will be transferred to consumer benefit reserve. Remaining 50% of A minus D, 50% of this one, 345,975 is transferred to tariff and dividend control reserve. That's all. This is the procedure of disposal of surplus. Now final disposal will be written here. Final disposal of surplus. Transfer to tariff and dividend control reserve 3,45,975. You can see here. This is the tariff and dividend control reserve. How much is transferred? 3,45,975. This is the amount transferred to tariff and dividend control reserve. Second, transfer to consumer benefit reserve. Transfer to consumer benefit reserve. So consumer benefit reserve we have transferred two times. First time, this should be transferred to consumer benefit reserve here, 64,400. Again we have transferred here. 3,45,975 will be transferred to consumer benefit reserve. So this 64,400 plus 3,45,975. Here I have written 64,400 plus 345,975, 4,10,375 is the amount transferred to consumer benefit reserve. Lastly, amount transferred for free use to the company. This is the point. Free use of the company is 2,30,650. 2,30,650. Take the total, you will get 9 lakh. You must get 9,87,000. What we got here. If you commit any mistake here, then this will not be confirmed. This is for our confirmation that whatever surplus we got here, the same surplus should be dispersed between these three. What are the three? Transfer to tariff and dividend control reserve, transfer to consumer benefit reserve, and thirdly, free use of the company. That's it. So this is the end of problem number 12. Come on, now we'll start the next problem. Problem number 13. See the 13th problem. Following balances relate to an electricity company for the year ended 31st March 2010. Rupees in lakhs. Share capital 500 lakhs. Reserve fund invested in 5% government security 300 lakhs. The income on reserve fund investment that will be taken in reasonable return. While calculating reasonable return, we take income from reserve fund investment. Then contingency reserve invested in 6% state government loan 100. So investment against contingency reserve. Investment against contingency reserve. This will be taken under addition item while calculating capital base. Loan from electricity board deduction item. 11% debentures deduction item. Development reserve deduction item. Fixed asset that will be taken first item, addition items. In addition items, first we'll take original cost of fixed asset. Depreciation reserve on fixed assets deduction item. Consumer deposit deduction item. Amount contributed by customers towards fixed asset. This will be deducted from fixed assets. The contribution made by the customers for fixed assets will be deducted from fixed assets. Intangible assets, the addition items. Tariff and dividend control reserve, deduction items. Current assets, monthly average, addition items. Then next page. The company earned a profit after tax, clear profit of 45 lakhs. Show how the profits of the company will be dealt with under the provisions of Electricity Act, assuming the bank rate during the year was 8%. That's all. The problem is exactly similar what we have done in the previous problems. Nothing, no new point is there. First, we need to calculate capital base. Second, we need to calculate a reasonable return. Third, surplus. And fourthly, disposal of surplus. So first of all, we calculate capital base. Original cost of fixed asset 1000. It is given first line. It is given fixed assets as 1000. From fixed asset we deduct contribution made by customers towards fixed asset 10. 1000 minus 10, 990. Then intangible assets given in the problem, average monthly current assets, investment against contingency reserve. Exactly similar, 4 points. Original cost of fixed asset, intangible asset, monthly average in current assets, and lastly contingency reserve investment or investment against contingency reserve. Total. Now deduction items. First deduction item always will be depreciation on fixed asset. So depreciation on fixed asset. Second, loan from electricity board. Third, debentures. So every time these 3 and 4 items, that means tariff and dividend reserve, that will also be there compulsory. So out of all these 4 items, compulsory every problem will get depreciation, loan from electricity board, debentures. Security deposit from customer. Some problem it may be there, some problem it may not be there. But if it is there, we should take security deposit from customer. Development reserve. Tariff and dividend control reserve, every problem will come across. Right? So these are the deduction items. A, addition items, total of addition. B, total of deduction. A minus B, capital base 170. 170 lakhs. That's it. Now we'll come to reasonable return. Calculation of reasonable return. Return on capital base at bank rate plus 2%. In the problem last line it is given bank rate 8%. So 8 plus 2, 10%. So 10% of 170 lakhs. 10% of 170 is 17 lakhs. So here I have taken 17 lakhs. Second, income from reserve fund investment. So it is given in the problem, reserve fund investment are 300 lakhs and the return is 5%. So 5% of 300 is 15 lakhs. So 15 lakh rupees I have taken the amount. Now 0.5% on loan from electricity board. Loan from electricity board is 150 lakhs. So 0.5% of 150 lakhs. It will become 0.75 lakh. So 0.75 lakhs means 75,000. It means 75,000. 0.5% on debentures. The debentures are 40 lakh. So 0.5%, 0.5% of 40, you will get 0.2 lakhs. 0.2 lakhs means 20,000. Similarly, 0.5% on development reserve. Development reserve are 50 lakh. So 0.5%, 0.5% of 50 lakh, 0.25 lakh. 0.25 lakh means 25,000. That's all. We got reasonable return 33 lakh 20,000. Take the total. 2 steps completed. Capital base, reasonable return. Third step is finding out the surplus. Clear profit minus reasonable return. Clear profit given in the problem 45 lakh. Reasonable return 33 lakh 20,000. Subtract. So balance surplus is 11 lakh 80,000. 3 steps completed. Last and final step is disposal of surplus. I told you last 2-3 problems have explained you in steps we will calculate how to dispose of the surplus. First step, 20% of RR, reasonable return. Reasonable return 33 lakh 20,000. 20% of 33 lakh 20,000, 6 lakh 64,000. Call it as A. A is 6 lakh 64,000. Next 5% of IRR, 5% of reasonable return, 5% of 3320, 1 lakh 66,000. Call it as B. A 20% of RR, B 5% of RR, C 1/3 of A. So 1/3 of 6 lakh 64,000. It comes to 2 lakh 21,333. 3 steps we have completed. Fourth step, B or C, whichever is less, will be called as D, and that is for the free use of the company. B or C, whichever is less. B 1 lakh 66,000, C 2 lakh 21,333. Which is less? 1 lakh 66,000. So 1,66,000 will be called as D, and that will be available for any use by the company. B or C, whichever is lower, that is 1,66,000 D, which will be for free use of the company. Now next, surplus minus A. Surplus minus A. How much is the surplus here? 11,80,000 minus A, 6,64,000. So 11,80,000 minus 664, 5,16,000. This will be transferred to consumer rebate reserve. Consumer rebate reserve, benefit reserve. Now calculating A minus D. A is how much? 6,64,000. D is how much? 1,66,000. So minus कर दो, 6,64,000 minus 1,66,000, 4,98,000. This is A minus D. A minus D. Now 50-50 कर लेंगे. 50% of A minus D will be transferred to tariff and dividend control reserve, and 50% of A minus D will be transferred to consumer benefit reserve. आधा 50-50. So 50% of A minus D, 50% of 4,98,000, 2,49,000. This will be transferred to consumer benefit reserve. Now 50% of A minus D, 50% of 498, 249 is transferred to tariff and dividend control reserve. Finished. We have disbursed. Now final disbursement will be like this. Transfer to tariff and dividend control reserve 2,49,000. Here you have transferred. Tariff and dividend control reserve 2,49,000. Transfer to consumer benefit reserve. 2 times we have transferred to consumer benefit reserve. First one, surplus minus A. Surplus minus A, 5,16,000. This is transferred to consumer benefit reserve. So 5,16,000. Apart from that, here 50%. 50% of A minus D transferred to consumer benefit reserve. So 2,49,000. Add up 516 plus 249, 765. 7,65,000 is the transfer to consumer benefit reserve. Lastly, free use for the company. How much amount is left with the company for any use? Starting 1,66,000. 1,66,000. Take the total, 11,80,000. So 11,80,000 is the surplus which we have disbursed according to the provisions of Electricity Companies Act. So totally 13 problems I have completed on Electricity Companies Act.